Welcome to Thursday Night Stock Charts Live. This is where we review the closing price action or the potential closing price action of the stock market this week using weekly charts. And we're going to talk about where to from here. I mean, what we want to do, the key to being successful in this business is anticipating the next move. We're not playing checkers, we're playing chess. Case in point, in the beginning of 2016, we started building out an inflation portfolio. Nobody was talking about inflation except for the fact that there was none. But we saw it coming because of all the money printing. Up until a year ago, we had 1.8% inflation. Then it became transitory as it rose. Now it's pretty much, it's here, it's staying, it's not going anywhere fast. So our inflation portfolio is vastly outperforming crypto, S&P 500, especially the tech names, QQQ, vastly outperforming those indexes by a mile. So we anticipated the move. We were involved with it. What was the next change that we did? The next change that we did was April of 2021, where I said, you know what? We're going to stop with the momentum trades. We are going to go towards more of a style of neutrality, meaning we're going to be selling options, selling premium, deep out of the money, options with high probabilities or POP, probability of profit, very, very high. That has been working out for us very, very well. Vastly outperforming the S&P 500, vastly outperforming the triple Qs by a wide mile. So what's the next move? What's the next play? The next play is going to be, unfortunately, the post-US dollar world and how we're going to make that trade. So we're going to talk about that. And what I want to begin with before I go to comments and saying hello to people, I want to point out this map to you because there's a narrative out there. We are at war. May not be kinetic in our end, maybe just between Russia and the Ukraine right now, but we are at war. We have been at war. You had Black Lives Matter rioting in the streets, DAs refusing to prosecute. And then we had COVID, the COVID grift, which is now becoming, the narrative about COVID is falling apart at the seams. Now they need a new boogeyman. That boogeyman, his name is Vladimir Putin. So when you hear the narrative from U.S. media, because of course they don't want any other contrary opinion, that's why they banned the RT News, that's the Russian Times News, which of course is going to have their own spin on thing. They only want you to hear our own narrative, the pro-U.S. narrative, the pro-World Economic Forum narrative. And when you take a step back and you take a look at, don't listen to what they say, but watch what they do. You take a look at this map here and it speaks volumes to you. And I mentioned this in the past, but now I have a graph, an illustration to show where we're at and how much we are becoming isolated from the rest of the world. Because the United States, here in blue, and obviously everything in blue, or every country here in blue, is a country that's implemented economic and political sanctions against Russia. Okay, it's a lot of real estate. But when you take a look at the gray area, those are the countries that have done nothing, zero. And even Japan, while it's highlighted here in green, the fourth largest economy, third largest economy in the world, it's only taken political sanctions, and really that means nothing. by and large. So when you take a look at who is isolated, is it us from the rest of the world, or is it Russia? Well, when you take a look at who's taking sides and the GDP, the growth rate of those countries, what camp do I want to be in? Do I want to be in the camp of high debt, unpayable debt? You have cancel culture ruining the society. You have wokeism destroying the society in the United States, which we've exported to Europe. Or do you want to be where hard work is rewarded? Individualism, not in the case of China, but individualism is rewarded. And unfortunately, that's where 80% of the world's population is in either agriculture and commodity rich areas of the globe, or B, where manufacturing is vibrant and they are producing things to sell abroad and to consume domestically. We don't do that anymore. Hell, we don't even produce enough of our own oil to keep prices low here relative to the rest of the globe. And the secret is, it's all self-inflicted. Every single bit of what I said is impacting us adversely here in the United States and in Europe is self-inflicted. We did it to ourselves. So we could cry about it, or we could say, okay, what's the next move? What's the play here? So we're going to go to that at the end of my opening comments. So let's go to the comments. Say hello to people who joined us here. Trader Isaac, a good day for shipping stocks. Oh, did you buy Zim? I haven't looked at them, so I know transports did well today. Paul, hey Paul. TZ Burton, welcome. Good evening to you. I skipped over Franklin. How could I do that? Evening, Bob and everyone. Missed your end of the update. No worries, man. Eric, great find. Can you link? Yeah. It is now in the chat box. No charge. No charge. Talon. Hey, brother. Amazon, if you have time. Okay. Yeah, we traded Amazon. We opened up a Strangle on Amazon, and we're doing well. We're probably going to let that expire tomorrow. Yeah, I heard about this Deltacron. Okay, you know what? Okay, you know, usually each variant gets less and less in terms of severity. So to me, it's just the media wanting more hype. We'll see what happens. Where do they say it came from? Did they share that, or is it just are they throwing a story against the wall to see if it sticks? You bet, Eric. I have been long Zim with size very long shipping stocks. Okay, we'll check out Zim and Amazon. I got to go to the members area. I like Zim. I like that chart. 35 degrees Saturday night in Florida. Wow. That's rough for you guys. I'm all set up on Slack now. You bet. Did you sell the puts on wheat, Talon? Okay. Let's get to it. Let me get a sip of water here before I go on my tangent. $17 divvy with Zim. Wow. Really? All right, cool. I didn't know that. Good stuff. All right. Let's get to it. What strike on wheat did you trade? Tens and an expiration. Okay. Hi Bob. Oracle reported. How did they do, Tom? I watched DocuSign. I'm going to go to that in a moment. DocuSign reported they got hammered again. So I'm glad I didn't get involved with that earnings trade. So, okay. Yoga Mac. Hey, brother. Welcome aboard. Okay. Let's get to it. Economic data so far this week. I just saw vitamin E is going up 20% due to energy costs to produce supplements. Great. 10 and 9? All right. Why don't we go over the chart of wheat? What's your expiration on that, Talon? All right. Okay. You curious about gold? We're going to go over gold. That means food, animal feed, fertilizer. Yeah, everything's going. As a matter of fact, I'm going over fertilizer in a minute too. Yeah, it's this is not good. This is so effing bad. So let's get to it. Okay. NFIB small business missed. You bet, Yoga Mac. Job openings rose, quits. I don't know what the expectation was, but they came in lower than the prior read. I don't know how much to read into that. Initial jobless claims slightly higher than expected. Consumer price index. We knew this was going to be hot. You think this is hot? Wait till next month. It's going to be bananas. CPI year over year, 7.9%. Double it. Double it. This is not the way they measured inflation back in the 1970s and 80s. You got to double it. Federal budget, 217 billion negative. That's a deficit. This was one of the primary reasons for the 1987 stock market crash. Nobody pays attention to it anymore. Back then, we were a creditor nation. People cared about our debt. They cared about our trade deficits. Now, no big deal. They're going to care soon. This is the move index. I mentioned this going into the week. It's one of the primary reasons why we went short the market on Friday of last week. We went short of the triple Qs using put options, bought them outright. We also sold naked calls using the TQQQ. We have since closed out all of our short positions. All of them. I'd have strangles on, so technically I have a net short positions are all off the table, soon to be going back on. So we expected a pullback on the move index. We could get a spike up higher here. We need to see what happens with Russian bonds. Do they default? As of now, the Russian stock market is closed. When it reopens, they have a 10-day. I believe the way it works is that after their markets open up, because they're overdue on their debt payment right now, 10 days after they reopen, they have a grace period to make that payment on their debt to avoid default. So we'll see what happens. If they default, expect a lot of volatility in this market. The Federal Reserve's balance sheet, I have not said this in a long, long time, has stalled. We haven't put in new higher high for 2 weeks. I don't think that we've done that in years. So we need to keep in mind, what we're doing right now is we're planning for the future, short term, long term. Short term, we're gonna swing trade the market as we always do. So what we want to do is remember what brought us to the dance, right? So what made this bull market happen? Was it strong economic growth? No. Was it our ability to export goods? No, it was our ability to print money. And this is what brought us to the dance. And once they take this punch bowl away, everything goes the opposite direction. Folks, they haven't even run off their balance sheet yet the stock market is tanking or has tanked. We're very close to bear market territory. So God forbid they start reducing this balance sheet. You want to see a taper tantrum? Look out. It's coming. And I'm going to go over a chart of the 10-year yield in a moment on a weekly time frame. It's frankly scary. So I want to talk about this. Has more to do with not politics. It has everything to do with the where to from here. When the dust settles, when Ukraine leaves the front pages and they come up with a new fear-mongering headline for us to be afraid of so they can take more of our liberties away, well, you gotta be able to be positioned in advance of that occurring. So what you're seeing set up here is the fracturing of NATO. What we did, Poland is a NATO, not one of the founding members, but a recent member of NATO. Now, we told Poland, hey, listen, give your jets over to Ukraine. And the Poles, being as wise as they are because they don't trust the EU, they said, no, well, what we'll do is, we'll do that. You'll just replace our jets with brand new ones. We'll give you the planes to deliver over to the Ukraine. You deliver them because we know it's an act of war, and we don't believe that you guys are going to come protect us and institute Article 5. What did we do? Nah, forget it. Don't worry about it. We're not going to forget about the jets. We didn't want to do it. We were probably going to stab them right in the back. This is just one instance of the fracturing of not just NATO, but our credibility everywhere. Everywhere. And you got to think about what's going on here in the United States, the breakdown of the mentality of not everyone. It's a very small, very loud minority of people, but they're allowed to be amplified. Their hate, they're very sad, broken people. And Facebook and Instagram, these are your enemies. Facebook and Instagram are your enemies, one and the same company. To allow calls for violence against Russians over Ukraine invasion. How they don't have a liability issue there, I have no idea. If a Russian gets attacked because of a call to violence on one of these platforms, heck, I'm suing the heck out of you, but they don't appear to care. So this is horrible. This is terrible. So you see this, right? You see how isolated we are becoming because growth is here. Commodities are here and here. Our neighbor to the south didn't even join us. So you have these regressive economies deeply indebted against the world. And what are we doing? We're sending them a signal, the rest of the world saying, don't rely upon us. Hell, even our NATO members can't even trust us. If you were a Polish politician right now, you got to be saying, Jesus Christ, these guys are going to stab us in the back. So this article here is a pretty good one. I'll share this out. It's pretty long to go through, but it tells the story. Imagine how many people won't want to be part of the digital dollar system. Think about what we've done over the past few years. It's become in vogue to cancel people because they express their opinion. There is a freedom of speech in the United States. We still do have that. But they're going to be planning on, as they did in Canada, Justin Trudeau showed his cards way too early, Grandpa Klaus Schwab over in the World Economic Forum must have called him out and said, listen, you better unwind that because they had a run on their banks up there. You can't do what he did when you still have a cash-based society. So what we're going to move to now is the digital dollar, meaning no more cash, can't hide it under your mattress, can't bury it in the backyard. Everything's online. And what can they do? They could cancel out a country. They canceled out a country. They commandeered the FX reserves of Russia. Usually you don't do that. It's like the third rail of things to do. You don't seize another country's FX reserves because who's going to want to store them in your system in the future when they know you're going to be able to do this? Here it is. The U.S., on the other hand, is to officially launch the initial stage of a powerful potential digital dollar. Imagine the centralized power of the dollar's global hegemony and the power to switch access to it and on and off. They got a typo here. On and off instantly, as happened with Russia's analog FX reserves. And imagine how many people want to be a part of that geopolitical system or of a Russian-Chinese equivalent when it's rolled out. This is the exact reason why, for the first time in my life, I talked about gold for the longest time. First time in my life, I bought the physical. So you become your own central bank, folks. Become your own central bank because that money that once they have the digital dollar in place, they can put an expiration date on your money. If you don't spend it, suppose the economy's slowing. Well, the Federal Reserve doesn't have to cut rates. We'll just tell people, hey, listen, either you spend your money or there's an expiration date on it. It's crazy, but it's coming. It's coming. As sure as God made green little apples. And it doesn't have to be this way. The way we turn this back is that China is already there. You go to China, I don't think you could use cash money anymore. I think everything's on your cell phone. But it's a police state. So our competition is where we're headed. We want to be that. The government wants us to be that. They're salivating at becoming China and having that control and not having to worry about getting reelected. Our secret sauce here in the United States is this, is were I, hopefully you can see this, were I the newly elected president of the United States, what I would do is I would just take this area here, which has been so decimated by jobs leaving the United States and heading on over to Asia and down to Mexico. I would broaden this out and I would say, okay, you come here to the United States and you build your factories here. It could be a mixture. I've had conversations with Dan Ushman over at TrendSpider about this. He's got his own ideas, but we're on the same page. You need to provide incentives for countries to send their manufacturing here. In essence, no corporate taxes for 30 years. You may say, oh, that's corporate welfare. It's not corporate welfare. You're putting people to work. You're going to get it back through income taxes. And plus, you're going to have businesses around those factories. You're going to have delicatessens open up, malls open up, and that creates tax revenue. So it all pays for itself, but you have to have manufacturing. You need to produce things. We don't hear any solutions to bring manufacturing back. No conversation, with the exception of Trump when he was elected, no conversation whatsoever about cutting the red tape. Whereas over in China, listen, they want to build a new dam. Hell, they're flooding the place and building a new dam. That's the way it's going to be. Whereas we We're our own worst enemy. Whatever we do is always self-inflicted. Let's take some comments. Hey, Bob, quite busy here. We'll meet this weekend. Okay, sounds good. Hey, Casper, if you do, send me an email, okay? Because they don't always let me know about the coaching sessions. Send me an email. Just let me know you signed up and you're ready to go, okay? Good. I am good, pal. Thank you. Hope you all is well with you. Uh, good for you. Good. Good. I'm not really sure why that isn't the same for defense driven by truck. I'm not sure about that. Well, yes. Smash the like button, please. Smash it. Helps me out with the YouTube algorithm. Uh, why we can't ship planes instead of fly them? Talking about, I'm confused on that. To the Ukrainians, we don't want to do that. But do the Ukrainians have enough control over the run? No, the Russians. The minute they heard it, they bombed the runways. Well, all we're trying to do, you got to remember what this is all about. They want us looking over there. They want you to look at Ukraine. They want you to hate Putin. They want you to argue with the next guy next to you about you not hating Putin as much as they hate Putin. You know, it's all BS. They're taking parking space up in your head. It's all clown world. What you need to be doing is looking at the fact that, well, you have a midterm election coming up. You have a potato for a president. You have an absolute moron for a vice president who made a fool of herself again over in Poland. They are going to get wiped out. Wiped out. If we have a free and fair election. I'm not convinced that they're not going to come up with some emergency to make mail-in balloting the thing to happen, to try to game the system. But all things being normal, they're going to get wiped out horribly. Not that hopefully the Republicans get primaried and we get some new meat in there, not these rhinos. I bought more METC today. Coldplay, cool. Cool. Guns are our secrets. You're darn right. Too much work on tax system required. Flat tax. They need to go to a flat tax. Gary Wagner, he saw a gold trade. China and Russia most likely to walk on SWIFT for good. Russia's not coming back. Russia's not coming back. Why? You know, why would they do that? They may sometimes step back in because, at some point in time, after this is all passed, their relationship with China, which has traditionally not been a good relationship, it'll become rocky. The Chinese will try to bully them, and they're going to want to have one foot on each side of the globe. Camilla did not service NATO. No comment. All right. Where were we? All right. U.S. consumer prices are rising at the fastest pace in over 40 years. No joke. Used car prices rolling over a bit. Russia to ban fertilizer exports to non-friendly countries. Think that's us? China warns U.S. against retaliation. Think about this. So now it's their turn, right? We rocked them hard. We really rocked them hard. The problem is you didn't knock them out. They have options. So now it's their turn. They're going to ban fertilizer. And somebody already mentioned it already. The price of food is going to skyrocket. Skyrocket. China warns U.S. against retaliation. Think about this. We now have the Chinese. Think about this. Keep your eye on this map. Look at all the gray here, those who are not on our side. Saudi Arabia wouldn't return Biden's call to produce more oil. Back to this. China warns U.S. against retaliation. Who's in charge? Volkswagen warns U.S. Volkswagen CEO warns Ukrainian war could be worse for Europe than COVID. I had heard about this. I had also heard about Audi not being able to produce on certain A4s, A6s, uh, their factories over in the Ukraine. Are they damaged? Not quite sure, but if they are, it's going to be a major problem for these European car manufacturers. And so we've had, what's been the response of the president, of his spokesman, Peppermint Patty, of our energy secretary? Our energy secretary. Their response to high gas prices is, well, you should buy an electric car. That's the response. Tesla increases vehicle prices as nickel squeeze sparks chaos. So they're going to have to jack up their prices on 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 Teslas, on all EV vehicles, because 70% of the world's nickel is controlled between Ukraine and Russia. You can't make this stuff up. So what happens traditionally when you get a gasoline price spike, as we've seen? You get recession. That's where we're going. We're going into recession. And in fact, I've been talking about this with members quite a bit. The yield curve continues to drop like a rock. When the yield curve inverts, 2-year yield paying more is higher than the 10-year yield, you're going into recession. Here, 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 here. This is COVID. We're just shy of it now. So buckle up, folks. Whatever rally we saw off the lows today, short-lived. Don't get used to it. So what's the strategy moving forward? Well, stocks are still expensive. Normally during the bull market, I would have done an earnings trade on DocuSign, and I would have sold deep out of the money puts, deep out of the money calls. And how would that have worked out for us tonight? This is about a 16.5% drop. Lately, I've widened out my strikes to about 20%, so we would still probably be okay, assuming that they don't move lower tomorrow morning, which is quite possible. Normally, before the recent correction, I would go 15% out of the money on those strikes. Netflix hammered me. So that's why we amended our strategy, and we've really pulled back from doing earnings trades of late because of how expensive the market is and the volatility. So this is not the way right now. It'll come back in vogue, but trading options on earnings, not the way to build wealth. Too much risk of a drawdown, avoid. Unless, of course, it's a big S&P 500 company. But Netflix was an S&P 500 company, and it took a nosedive. Where do we want to look? Overseas, folks. You got to look overseas. When the dollar corrects and ultimately goes into free fall, which is what we're expecting. It may not be tomorrow, may not be next year, but it's going to be a precipitous drop. Here's a monthly chart of the dollar. Pretty good. Right? Not looking all that bad. Monthly chart looking strong. A lot of resistance above here. But as you drill down, things aren't all what they seem. Right? So you still have a flight to safety in the US dollar. It still is the world's reserve currency, but it's losing its luster. So when this dollar begins to roll over and breaks down to new lower lows, well, you don't want to be in growth stocks. You don't want to be in US growth stocks. US industrial stocks paying a dividend, yes. But where the real growth is going to be is in emerging markets. That's where you want to be. Remember, these are the big swinging dicks moving forward. Pardon my French. These are the guys that are going to be leading the globe moving into the next few decades. So where do you want to be? Well, Vietnam. It's come off of its highs. It's at a support level. Would I buy it here? No, not yet. What kills me is I first started talking about it back here. Franklin, if he's on, he'll attest to that. Because he kept asking me, when are you going to buy Vietnam? India will be a beneficiary. Nice bottoming action this month. It's off of its highs. What did we begin buying this week? Indonesia. Indonesia, and this is an investment. This is not a swing trade. So we're going to be adding more to this. This is a monthly chart. We're at the precipice of a major, major breakout on Indonesia. So we're not looking here anymore. This is old money. We're looking here for the growth that we need to take us up that new leg in this project that we call wealth accumulation. Switch iron, like Val in Brazil. Yeah, Brazil's doing great. Bob, any thoughts on Yang? Yeah, you know what? I brought it up. I took it down, though. Something's going on over in the Chinese bond market. I don't remember the name of the chart. I just happened across it. No, that's not it. I was going to talk about it, but I couldn't. Here it is. This is it. This is it. So this is the CBON, the VanEck Vectors China AMC. I don't know what that means, AMC. China Bond ETF. And I took a look at this chart and I said, holy crap. And apparently I had been analyzing this. I don't remember doing it a while ago. And I was eyeballing a breakdown and we got the breakdown. So we are now breaking down on the bond market over in China. Now, could it be that they have some sort of an exposure to Russian debt? They're worried about defaults? Maybe. I'm not sure why, but this is not a good sign. We're at support right now. If we break to new lower lows on the month and we close down below the support level, that's going to spell trouble over in China. So you're asking about Yang. And for those that are out there new to trading and you're wondering what does the bond market have to do with stocks? Everything to do with stocks. You always got to pay attention to the bond market to know what the stock market's going to do. Yang. Wow. It's a big breakout. Big volume. Something's going on. I think what it could be is a response. Usually, the Chinese markets trade in tandem with the U.S. markets, and it could be that we're seeing a sympathy sell-off on Chinese stocks. And for those not familiar, Yang is the chart that we're looking at. That's an ETF that puts you short of China. So an interesting chart. I think that's what the play is here. I know their GDP has slowed down some, but they're still the fastest growing economy in the world. All right, let's go to the weekly charts. And I want to spare some time. We're already past 6:30. We'll talk about this chart here. Folks, I always like to say when I do these commentaries on a Thursday night, one trading day left to go. It's amazing how these charts can change by the end of business on Friday. But by and large, most of these charts, the way you're looking at them right now is the way they're going to close. But there's some times where critical charts, like the 10-year yield, it could look strong now, weak tomorrow at the close. So open mind we want to keep. I just sounded like Yoda. All right, so 10-year yield. You remember it was just a few short days ago, yields were cratering. Why? Well, you had money leaving stocks, going into the bond market. What are they doing now? They're leaving the bond market, but are they going into the stock market? Not really. So you have a breakout here, big time, on the 10-year yield. Remember, one trading day left to go. But are we seeing a commensurate rally with the S&P 500? Hell no. You're not seeing a lot of money rotate from bonds and into equities. Where you're seeing them rally into, oh, that's a, I wasn't ready. They're rallying into gold. Gold up 5.25% on the month. Daily view. Big sell off yesterday. We expected that. This is why I bought my physical yesterday on that pullback. So money is rotating, not back into equities, not back into growth, rotating into commodities. That's the new bull market. EV is not more economical over the life of the. Very true, man. People don't appreciate that. Those batteries cost a lot to replace. I heard about a guy who set his car on the Tesla on fire when he got a bill for like 20 grand to replace the battery. Yang is 3 times leverage. Yes, very good point. Very, very risky. BE. Okay. I like UVXY. I don't like the VIX ETFs. I don't like them. Too much time decay. SARK. What's SARK doing? Yeah, it's looking strong. Looking strong. So avoid growth. This is the inverse ETF of the ARK funds. All right, VIX Weekly Chart. Believe it or not, we're down on the week along with the S&P 500. So when you get this, normally I give the edge to stocks when you have a down week on when they trade in tandem. So if I see VIX up, S&P 500 up, I'll bet that I'll bet that the VIX is probably going to win that out. However, if the VIX reverses red and the S&P 500 is down, I'll bet that the S&P 500 is going to rally back. Small caps, believe it or not, up on the week, 1.25%. Volume a bit light. That may change tomorrow. Maybe decent volume. Tues. We closed out our short. Why did we short last week? We did it because of this bearish key reversal bar off of this declining downtrend channel, the upper band. So we booked profits, and thank God we did. But I still don't like this chart. What else do we want to talk about? LABU. LABU, we did very, very well. We've been doing very, very well with LABU. So we booked profits yesterday on the common shares and on some options that we wrote, put options that we wrote. And the shares are now up on the week. We opened up a new series of naked puts going out into next week. And if we get a rally here, we'll just continue to roll them up. Generating cash flow. It's all about cash flow with us right now. What else do we want to take a look at? Energy. Energy's still doing good here, off of its highs. Look at the volume. Amazing volume. Daily chart. It's going up higher. Beautiful chart. All right. What else do we want to talk about here? How did my little egg company do today? Bad week. One trading day left to go. All right, Lewis. I have it on my list. It's popular tonight. I don't think you're going to like what I have to say about it. That's why I asked earlier. All right. Let's do some chart requests. We'll close it out. I got to stop right at 7 o'clock tonight, guys. Who's been asking about AREC? Was that Trader Isaac? Looks good here. Really, really good. Very, very good. This is a weekly view. Very nice monthly view. Very nice. Very, very nice. We like it. We like it. Okay. All right. Everybody's asking about wheat. Let's bring it up. All right. So here's the thing about commodity spikes. You know, when they're happening, it's an amazing experience to be long of these things. You catch a tiger by the tail, it rips up higher, and you're a bull in the china shop. See all these analogies and these descriptive things I'm using. I'm trying to become a, a Confucius of the fintech world. Anyway, you got to be careful about these rallies because they can end with a bust like this. It's not like a stock where you go through a series of spurts and growth, higher lows, higher highs. Usually these things just they burst up higher, they crash up, then they crash down, consolidate, crash up, crash down, consolidate. That's why that's why I try to go deep out of the money with any options that I sell because I'm not worried about uh, I'm not worried so much about making money per se. I'm more worried about having my head handed to me. That comes with experience. So this is my long-winded way of saying be careful with wheat because we are still trading above the third standard deviation Bollinger Band. Yes, Russia's going to ban fertilizers. Yes, they're going to do all this. But you'll never know what news event could occur, right? Right now, we have a very, very hard line with Russia, but I don't think that they've banned their fertilizers yet. What if one day you wake up on a Monday morning and a Bloomberg pop-up headline occurs or on CNBC's app, and it says, U.S. negotiated backdoor deal. We lighten up on certain sanctions on them. They're not going to uh, uh, ban fertilizer exports. What happens to wheat? Okay, so we want to be very careful about the unknowns and anticipate these events that they occur. They happen all the time. So just be careful about getting too close to the money with selling naked puts or especially don't sell naked calls on commodities. Don't do that. Don't do that. I mean, think about if you were short of nickel the other day, you would have been bankrupt. Here's a weekly chart of wheat. I mean, this is not a great chart. All right, so I'm not saying it's going to crash or anything like that. I'm just saying be careful. Stay small. If you're going to sell naked puts, use your probability calculator. It's simple. Bring up Thinkorswim or Fidelity, whatever. Doesn't matter. All right, so here's wheat. This is what I do. It takes 2 seconds. Wheat. And you take a look at your probabilities. Why isn't this not coming up for me? There it is. Wheat. So the 318 strike out to 318. We'll change this to in the money. I would have been looking at shopping around for a $7 strike on those weak contracts. And what if I'm wrong? What if it never comes anywhere near 692 and wheat proceeds to move up higher? Well, all I need to do is just roll up to the next strike, book profits, roll up to the next strike, book profits. That's the way you trade these things. Don't go too close to the money when you're selling premium, please. I did it for years, years and years, and I did okay, but I didn't have the consistency of constantly generating cash flow. There were too many drawdowns, and you got to avoid those drawdowns. That way, you get consistency, no drawdowns or minimal drawdowns. You're going to get drawdowns. That happens, but you make them few and far between, and you'll be far better off. It may not seem like you're going to make a lot of money down here. Those $9 puts look a lot more profitable, but the probability of profit is far smaller than if you were to stay down at the 7 strike. We want to go with the probabilities. The probabilities will keep you safe. So that's my take on wheat. So longer term, I'm bullish on wheat. Right now, it's a rough week. Daily chart. How do we close out the day today? This is looking good. Even with this observation, though, I still would have gone with a 7 strike, right? Because what if I'm wrong? Okay, I'll take it. I'll take it at $7. I'm good with that. So here's your wedge formation. Look for a breakout. Stokes are rolling over, lower highs, lower lows. Okay, so I think longer term it's breaking out, going up higher. You just may be married to rolling that strike out for a little while. All right. What else do we have? Yoga Mac. Devon Energy, I believe that is. OPTT reports on Monday. Okay. We own it. I like it. Excuse me. I'm so sorry, folks. I got no sleep last night. Um, let's go to Amazon and I'll work down my list. I don't like it. I think that this is an opportunity to sell it short. When I woke up this morning, we did short Amazon. I had expected, or the play was not that I expected it. I hoped for that gap up to be faded, but it didn't happen. So when that didn't happen, I decided, okay, let's put on a hedge here. Let's play it safe. And so we sold a deep out of the money put to offset our deep out of the money call. We're profitable on it. We're like, I don't know, 60, 70% profit on it. I should really take it off the table. But I think that Amazon's going to break down. So we're probably going to look to re-short Amazon going into next week, because what we're doing here is that you got the big jack up today, right up and into resistance. When wouldn't I short it? If we close above this resistance level here tomorrow. We're in a downtrend channel. Might we break out here? Sure, but I wouldn't get long of it until we get that breakout. Right now, the downtrend is alive and well. This split means zero. I mean, that's only to get the newbies excited about buying Amazon because now it's affordable, or it will be affordable. So there's zero reason for me to go buying the shares. That means nothing net. So Amazon, I'm still bearish on until such time as it breaks out. If it breaks out, well, then it might be bullish. So that could happen tomorrow for all I know. Monthly chart, we're consolidating here. I wouldn't short it. I wouldn't short the comment. I wouldn't buy puts on a spec basis. When I sell naked premium, yeah, naked calls, sure. Zim. Love this chart. Love this chart. Monthly chart. You don't get much stronger than this. Weekly chart. Very nice. This is going up higher. It's coming up here to around 84, 85 bucks a share. So if you have TrendSpider, 35% discount code below. Touch, bounce. You want to know when to get out of this thing? Book your profits. And you're good to go. That's Zim. Daily chart. Let's take a look at the daily chart. Love it. Bullish reversal bar on the day. It's going up higher. Love it. What else do we have? Devin. It's good. Very good. Broke out above resistance. A little bit of a pullback, but there were buyers there bidding it green. Doji star, nearly a doji star formation on the week, but a continuation breakout on volume, no less. Daily chart. Daily chart, we broke out today. Watch for a retest here on Devon. See if it holds. If it does, it's a buy. I got to check the members area to see if anybody requested anything. See, yeah, thank God I checked. CVX OXY and Eric, I see you requested Tesla on the 3rd. We'll take a look at it anyway. I may have already gone over that for you. All right. So CVX. Looks good. This is a daily chart. I usually don't start on a daily chart. Let's pull back. Beautiful monthly chart. You got resistance immediately above here. So watch. I want to show you this. Go to the daily chart, overlay monthly resistance. There you have it. I would not buy this. I would not buy it. It looks good, but you got to know where your resistance levels are if you're going to initiate a position, and it's immediately above. So I'd be very, very careful here on Chevron. Very little reward for the risk you're going to put on because you're going to be hoping that we break out above resistance. So I wouldn't put this trade on right now. I would either wait for a breakout of this breakout point or a pullback of some sort, maybe back down to here. Right here. Give yourself a little bit of a buffer. This is way too close for comfort. And you can already see sellers are moving in. They moved in here, here. Be careful. OXY. Icon sells. Buffett buys. Stock is in play. Love this. This is a daily chart. Let's go to the monthly chart. All right, so we have a monthly breakout, but resistance immediately above. So would I initiate a new trade? No. No. Weekly chart. Again, resistance immediately above. This was the time to buy here. We had the breakout. You got a pullback and a retest. We should already be in it. Daily chart. It wants to move higher. Broke out. Oh, no, it did not break out today. It didn't. It has not broken out yet. Tried to. It did not succeed. So this is probably going to go up higher. If you're going to buy it, scratch the itch. Stay very, very small. Wait for the breakout and or a pullback and add more on that pullback. TSLA. Tesla firming up here. Tesla's firming up here. We're still down below support at 854. That's got to be recaptured. This is a monthly chart, so we have a lot of time to go here. Ooh. So we broke support, rallied, attempted to recapture, failed. We're doing it again. This could become a short. If we break down to new weekly lower lows down below this support level, this would be a bear flag setup. So if we break down below 784, Tesla becomes a short. Daily chart. But right now, it's looking okay. It's in a very tight wedge formation or triangle formation. Call it cupcakes. It doesn't matter. Looks like we're poised for a breakout here. So I would not try to front run a short on Tesla, nor would I front run a long on Tesla in anticipation of a breakout. I would wait for the breakout, see what the volume is, and then execute on the trade. All right, folks. That's it for tonight. I got a hard stop. Thanks for joining in. Smash the like button, please. And for those that are not ready to make the 14-day move into the contrarian trader, joining up, playlist on YouTube, my unlocked premium. Go check it out. Check and see my past premium content. Would it have helped you in this current market environment? I think you'll agree it would have. And that's it for tonight, folks. Have a great weekend and a profitable trading day tomorrow. Be well. Take care, William. You too. Have a good night.